All right, what is going on, guys? It's your boy Flystewie. In this clip right here, this video, we are going to talk about recession-proof stocks, and I'm also going to trade the USD CPI forex trade live for you guys. So without further ado, let's get into it. I'll show you what the charts are doing this morning. As you can see, I got a little trade in. It's losing. It's a loser. I was trying to get it before edge trading around like 1% of my portfolio. Basically what happened is I was going for the momentum trade. I was trying to trade these little, you see these little squiggly lines up here. I saw the momentum going upwards. I thought it was going to range up to this zone here. So I tried to get a before trade to try to get a piece of that action. And that was not the case. So it moved against me, and now I am trading the actual news trade, which is happening in around 15 minutes. We are going to trade it live, so that should be fun. And it looks like if you go into hour 4, these are the time frames up here, and you see how it's drifting down towards this line. It looks like it filled this before. So I think there's a support that might happen here. You know, this is the hour 1, so I would not be surprised if this acted like support and went up here. Because it's not a clear as read as, you know, I want. Normally for these trades, I allow myself between like 5 to 6% for these type of trades. Instead, I'm going to around 4%. 4% means I'm trading 0.22 lots 3 times. This is a little risk management calculator I have for myself. I think 4% is a decent amount of certainty on the trade. I think it's going to be a buy to the upside. Upside is between 520 and 600, so let's put that down. Let's go for 470 in this trade. I think 470 is reasonable. Stop loss will be 150, and then we're going to trade in like 12 minutes. So that is the type of trade I'm seeing. By the way, guys, I am also on YouTube. Make sure to hit that subscribe button. We do videos where we talk about Forex, of course, and I day trade them all live. I also do a popular, nice little podcast. So make sure you guys swing by the channel, hit that subscribe button. Anyways, let's look at our trades today. So I am trading this consumer price index report. You know, Forex Factor is a great site that really goes over the, here, let me put this over here. It really goes over all the live trades and stuff like that, all the trades that happen. So I'm trading the consumer price index report. All the trades that happen. As you can see, this is a nice little brief of what's happening or what the CPI is. Every trade kind of has something like this. So it says change in the price of goods and services purchased by the consumers. So consumer prices amount for the majority of overall inflation. Inflation is important to the currency valuation because rising prices lead to central bank to raise interest rates out of respect for inflation. So that's kind of the economic justification of why CPI is an important trade. And to trade this pair, I'm trading gold versus USD or USD versus gold. So I wanted to talk about recession-proof stocks. So essentially, when you're thinking about a recession and, you know, the markets are at these crazy highs, right now you want to go over around the market and try to find yourself like buys, great priced buys that you can buy at a discount, even though everything looks overvalued. You go and you look at a company like Facebook. Like, let's look at a company like Facebook. A company like Facebook has been on an absolute tear this year. That's almost like a 50% return, basically. It just kept growing like crazy. You look at another stock like Apple. You know, Apple has been growing like an absolute monster. Like, look at that. Is that doubled price in 1 year? Like, absolutely insane. Oh, yeah, you guys can't see this. Absolutely insane. Apple's grown like a monster the whole year, literally like doubled its price. Absolutely crazy, right? Look at that. Absolutely nuts. So when it comes to this, you know, the market's been up like 30-40% last year. how can we as investors take advantage of what's going on, even though that the market is still high. So, a lot of people see that the market's gonna so high, so they are expecting like a big pullback, maybe 10 to 20%. If that happens, I like to have a significant piece of my portfolio in cash and also like recession-proof stocks. So I'm taking a lot of profits now, even though I won't take advantage of the market situation as some people. I'm still taking a lot of profits while at the same time investing a lot in different companies. So one of the companies that I like companies that are in real estate, and I like companies that are in like the healthcare sectors, especially like senior house living. Real estate, because real estate companies pay a higher dividend. We know that companies that pay higher dividends, they're going to do well in recessions because people can hold them through recession. They're not inclined to sell as much, so they'll keep their stock price a little better than other ones. And also healthcare, everyone needs healthcare, whether the economy is doing good or bad. So it's kind of like a non-cyclical, non-economic type stock. It doesn't, change with the economic cycles. So the company that I'm looking into MPW. I've been investing in a while. And the reason I like this company, if we look at the year chart, how much has gone up in a year, quite a bit, is it pays a great dividend. It's always been stable for a long time. Of course, during the recession, all these companies got beat up, of course, like any company. But it's been pretty stable. Of course, real estate, if it's another real estate crash, this company obviously might not do the best, but it still might do better than others because look at this dividend. As long as it doesn't cut this dividend, you're guaranteed 4 to 5%. And of course, the dividend will stay the same, hopefully, as long as they don't cut it. So the dividend yield, if the price goes down, you'll be yielding like an 8% dividend yield, basically, if the thing goes down. Your dividend amount still stays the same, but your dividend yield obviously will go up. Another company I like it's a bit risky, but I'm a technical trader, so I like to look at what the market's doing. And as you can see, the market here, look at this. Boom. This company has been beat up. I really like beat up companies because I just see if they return back to the mean reversion, return back to how they were doing before, then you can get that surplus return. So I really like that. I want to start investing a lot in it. It's really been beat up though. It seems like it hit this support kind of down here. Might fall a bit further, but these are two good recession-proof stocks, nice little recession-proof industries that I like. And of course, if you're really safe, you can get something like a bond ETF. Like this is a bond ETF. I have a lot of money in it. Look at how boring it is, but boring's good because look at that 3.5% return. Like that's just for free. That's better than your savings account. So it's a nice alternative to cash. You could keep your money in there and chill. All right, so let's see what the market's doing. If we say, let's see if we say that the market went down here, see it went to this resistance line here. It looks like it's going to reject off. So the market absolutely dropped. You know what? I'm going to up this to 5%. So it's a bit bigger of a risk. 0.27. I'm going to go 0.273 times. A bit bigger of a risk, but I see something in the market. It's dropping down to the zone I like. If you see, I got a 0.27 lot. I'm going for 3 buys. So we got trade in 3 minutes. While the trade's going, we can look here and kind of see what the spread is and how crazy it gets during the trade time. It's going to be interesting. So we got 3 minutes till trade. Remember to hit that subscribe button. We post these videos. I'm doing another one tomorrow. Tomorrow I'm going to talk about the 3 stocks to buy for February, or 3 ones that I'm looking at. I think I'm going to buy stocks like every week until I invest around like 10% of my portfolio. So definitely stay in tune for that. Now, I don't know how this is going to burst out, but this is the daily chart. I'm not really a swing trader, but I really like this position here. It's like my #1 position for a swing trade because it's gonna go up. Here's kind of too close, but you know, this could be also be a good trade here if you're trading here, and then you can go up there. But I really like that trade there. All right, we got 2 minutes till trade. Let's see what pops off, my G. So I'm just gonna take that off the map there. Might get a better price, might get a worse price. My guess is up here to this resistance there, so that'd be a nice trade. I lost 2 trades earlier in this because I was trying to play the momentum, so lost a trade here and lost a trade there. Had some big winners last week, as you can see from these trades here. So let's see what happens here. So because I want a good spread price, I'm going to go in a bit earlier with one of them. So we got 22, 23. So we got a minute till the trade. Let's see what pops off. So we got gold here, good. We're gonna buy one here. Another gold, this is gold. We're gonna buy another. Can't really see where my take profit, oh, here's my take profit right at that blue line where I want. And then 30 seconds before, I'm gonna buy again. Now, because it didn't reach this red line here, you know, like it could still like burst through, but we do have a stop loss. So let's see what happens. I'm around 60% sure we'll go up. So, you know, that's a 40% chance of loss. So, you know, still playing those odds. I have a 150 to 470, so that's my risk profit. If it doesn't break through my stop loss, like it shouldn't burst through my stop loss. That's the good thing about this trade. And if I win bigger, you know? Let's wait. So even though I lost a little bit. So you see how it really only filled down to that lane here. Here, let's go to the minute one so you can see better. So it really only went down 93 pips. Maybe I could have held it to go up. But if I won and it went up, it would have gone up like 470, right? So there just wasn't that much volatility in that trade. So even though, you know, I went through and I lost, if it would have gone up to the upside, I could have had a huge upside. And I saw the patterns where it's like, if I lose this trade, it's not going to turn against me that much. CPI can be hit or miss. So, you know, that's CPI. We do have a trade tomorrow with retail sales, but that's just how the trade goes. That's just the trade life goes. So because this didn't fire down, most likely it's going to swing back up. We'll do a 0.1 to see if I get that premonition right, just to track the market. And yeah, so the 0.1's kind of up there. Anyways, guys, thanks for rocking out with this video. Hope those 2 recession-proof stocks, you know, vibe with you well. Hope you like them. And we Fleck Crew, we out. See you guys next time. You know what? It'd probably be good to turn